All right, good morning, traders. This is your free video from seasonalswingtrader.com. Today is Tuesday, May 2nd, 2017. Looking at the current market here at the S&P, we're trading at 2383 or down 4 points. The mini Dow down 20 points at 20,852, and the mini NASDAQ down 3 points at 5627.5. We've got a lot of news economically and geopolitically this week. We've got Apple's earnings here kicking off today after the close, and then the FOMC minutes tomorrow afternoon on Wednesday, and then the jobs report on Friday morning before the cash open. Let's move over to this week's seasonal spotlight trade, which is CSOD, or Cornerstone on Demand. Now, over the last 6 years, this trade has been profitable 83% of the time for an average move of 9.25%. Here on the daily chart, you can see that we had stiff resistance here and rejection at all of the averages, as well as a 50% retracement level. So you've got the 50-day average in blue, the 100-day average in orange, and the purple is the 200-day average. So we met resistance here at the 200 and 100-day averages, as well as the 50%. Proved to be pretty strong price action here, as well as at the 50% retracement level. We are currently trading at 38.60 or down about a quarter. Now, a projected move of about 9%, trading here at 38.5 or so, would or should put us up here at the $42, 42.5 level, which is a retest of this long-term downtrend line. So that is a good ultimate target. Keep in mind we have earnings after the bell, today, so would exercise any type of caution or advise staying on the sidelines until we get past earnings. And then what we would be looking back is a slingshot in price action and closes higher above the 50% retracement level, and ultimately the averages here for the next leg higher. Now, what is most interesting to me here is if we flip over to the weekly charts, you can see a long-term weekly chart setup here. And all seasonals aside, we have a consolidation triangle pattern happening here. We've got our uptrend line here going back from February 2016, downtrend line really going back to 2014, but we started it here in September of 2016. So you can see that prices have been bouncing around here in this average, in this range, testing it multiple times. But what we like to do here is take this swing high here of $48, this swing low here of $30, measure that move, that is $18, okay? So if we get a break to the upside here on a weekly close, we have $42 is the close that we would be looking for. We take $18, add that to 42, that is $60. So we go up all the way to $60, which is our target. What do you know? That takes us up to a retest of the all-time highs. Okay, and that would be perfectly aligned with the seasonal bias. Now, on the downside, so if we break to the downside here, we've got a break of $36 here, or $35, $36. We subtract 18. We do the same, but to the downside, we take $18 from the break here at 36. It takes us down to $18. What do you know? That takes us back here to all this past support and this price action back here. So either way, break to the upside, we've got a clear target here. Break to the downside, we've got a clear target here. All seasonals aside, this is a good, nice, clean technical pattern for you technical traders, and hope that helps. We'll see you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.